Now, what can I do in order to ensure my family doesn't have to be on that hamster wheel? And I think that's a lot about what Bitcoin bonds are about. I've gone in and out with it, but kind of final nail in the coffin with it here. If Bitcoin has a 60% compounding annual growth rate over the last 10 years, 60% CAGR, yes, you get stuck in this mindset where it's like, hey, why would I do anything else? Because it's not going to beat 60%. I mean, nothing's beating 60%. Bitcoin is the best performing asset in the world. And how do we leverage its performance? That's kind of like the question that Bitcoin bonds answers, because you still need a cash flow. It's sad. But that's the reality we live in. You need a cash flow. If you didn't earn cash, then you wouldn't. What would you do? You'd sell your Bitcoin and get hit with huge capital gains. And maybe you earned some cash. You spent your money on expenses, and then you bought some savings, right? But then you have to liquidate those savings because there's an emergency or something like that. And now you get hit with short-term capital gains instead of long-term capital gains. Now you're really getting wrecked and demolished through this. So that whole process really hampers, what we can do with Bitcoin, except when you turn it into a bond product, except when you turn it into a lending product, because now we're talking about interest earned instead of capital gains. And if you don't do anything else, this could be a way to kind of escape that hamster wheel, get out of that debt slave cycle, because the best performing asset in the world is now producing your cash flow for you, right? Because if you lend $1 million into the bond, 800,000 goes into the treasury, 200,000 goes into Bitcoin. Well, at the end of the maturation of the bond, you get your $1 million back through the treasuries, through the maturation of the debt notes. But what's left over is Bitcoin. So even if Bitcoin goes down, which there's no precedent for Bitcoin to go down over like a 5-year period at all. Maybe in 5 days it can go down 50%, but not in 5 years. It's engineered money. It's number go up technology. It's not going to do that over a longer period of time. So what you do is you take that performance and you turn it into cash flow. You take that performance and you use it to empower yourself and your quality of life and your standard of living. And what it does is, instead of you taking your Bitcoin and borrowing against it, you're lending to another. Michael Saylor just talked about this. What problem does MicroStrategy solve? Right? Because there's a businessman in China. He is not allowed to buy Bitcoin. He is not allowed to do some of these things that other people are allowed to do. But he can lend his money to MicroStrategy, and then MicroStrategy takes that money and buys the Bitcoin, and it becomes a levered play. It gives them exposure to Bitcoin. But it also creates a little bit of risk, because if the price of Bitcoin goes down, then the principal value of your investment can go down. Now, it's not going to go down tremendously because they're convertibility notes, right? You're going to convert it into shares and you can just wait, but it can go down. A principal protected note cannot go down because the principal is, that's the whole point of the principal protected note. But what's left over is the performance of Bitcoin. So if we get our 60% CAGR on Bitcoin over 5 years, the price will go up 10 times. And that would be that $1 million turning into $3 million. So that is a significant gain. That is actually 40% APY. So imagine if you could have a savings product at 40% APY, how much more your quality of life and your standard of living will increase through adopting a product like this. It's the perfect in between when you have Bitcoin trapped with capital gains and cash flow products, but no exposure to Bitcoin in any of these existing cash flow products, because we haven't escaped that cash flow paradigm. You're either trading your time and energy for cash, or you're going to go broke. You need to generate cash in this society. And if you generate cash, you should spend that to pay your bills. And then whatever's left over, you save 100% of it in Bitcoin. And this is kind of just a tool to help people accomplish everything that guy was saying about how we use it. Because what's so beautiful about connecting the language to the law is that it's coded law. We have now removed the human element from naming interest rates, from naming supply, from doing all of these things. And it creates a much more fair and level playing field, which then will allow people to be more focused on their quality of life and standard of living, allow them to build their families and supply for them, and kind of fix a lot of the problems that we see today in the fiat system, which are actually strategically designed to be used against us, to depopulate us, to get rid of us. I mean, it's a very sad thing to say, but it's true. A lot of these people do not like us. They want us dead. They want us gone. And that's why the system is being used against us. Bitcoin is the peaceful revolution to use a system that will empower you instead of taking away from you. There's that value delivery instead of value extraction.
That's interesting. Okay, so digging in a little bit on the details of the Bitcoin bond, because I think this is interesting stuff. So you talk about the principal being protected. Let's say that we want to do around $1 million. You said in your example is kind of an 80-20 split there. I'm assuming that because you said that in that 80%, that goes to a traditional, like a traditional bond in terms of how we think about it today, right? I would assume though the principal amount, the portion of the full principal investment that would go toward the traditional bond that we think of it today would be also based upon what that current interest rate is, so that at the end of the term of that note, bill, note, or bond, whichever one it is, that total return, including interest, equals the principal, correct?
That's
okay. And then, so then the difference that goes to Bitcoin, let's assume that it goes up X amount, whatever we want to say that number is. Does all of that Bitcoin then go back to whoever bought that Bitcoin bond? Because the government then at that point, they're making their money on the borrowed money, because they're getting to spend today that was my capital. Okay, so is that correct? Do I have that right?
Yeah, but the Bitcoin doesn't go back. The Bitcoin actually gets liquidated. The Bitcoin gets sold, and then the dollar amount is then distributed. So you have interest earned versus capital gains. But what's so important about it is that, yes, your principal is protected, but let's say Bitcoin goes down 50% in 5 years. You had 200,000, now you have 100,000. That's 10% over 5 years. In simple terms, that's 2% APY. So when interest rates go back down to 0 to 0.25 on the overnight rate, and bonds go back down to around 2 to 3, even if Bitcoin went down 50% over 5 years, you'd still be keeping pace with those bonds. So depending on the amount of money they printed, you might also lose in real terms. But the point is that that's a doomsday scenario, right? If Bitcoin does what it's supposed to do, the whole idea of the product is you can now lend your money and outpace inflation, because Bitcoin is going to perform. The more inflation there is, the higher the price of Bitcoin goes. So, you know, it's right there. It's designed that way, right? That Bitcoin has to go up in value when the dollar gets inflated. So as that happens, it protects your purchasing power. So you can actually store your value in a cash flow vehicle rather than an investment that is open to capital gains. It's just a different way to store your value. It's a hybrid model to store your value, but store your value in a world where we are making this transition. Like you said, we're in this middle ground. We don't have a Bitcoin standard. The dollar isn't dead. We're in this such a weird time frame, because we're only in year 15 of a new emerging digital asset class that is an engineered money, the most pristine form of collateral in the world, and we're stuck in the middle. And one of the ways that you can empower and benefit not only yourself as an individual, but going back to what I was talking about, Social Security, you could recapitalize Social Security. You could recapitalize the Republic with this type of product, because the product is going to create a yield that is greater than inflation, because Bitcoin is always going to outperform inflation. And then as that happens, you can basically come through on the promises that you made. $217 trillion of unfunded liabilities here in the United States. We could fulfill those promises. But do you know what that means for Bitcoin? Multi-millions of dollars per Bitcoin. So that value isn't just created out of thin air. It's just transferred from one medium to another. So you want to be positioned in Bitcoin as your savings, and then you could leverage some of these cash flow products so that you don't have to sell your Bitcoin. Because I really don't think anybody should be selling their Bitcoin. Not where we are right now. We're in year 15. We're at the bottom of the S curve. Price is still moving relative to its cost of production based on the proof of work consensus and difficulty adjustment. We are nowhere near full adoption. When we get to full adoption, things will be much more stable. Jack and his team will be able to say, okay, maybe we're looking at a 4 to 5% return on investment, because what the value of Bitcoin is global GDP divided by 21 million. And global GDP is not going to go up and down by those big drastic numbers. It'll go up 2, 3, 4, 5%, or down 2, 3, 4, 5%. And so too will the purchasing power value of Bitcoin after mainstream adoption and things start to finally settle out. But right now, the upside is just ridiculous, because we're at the beginning. We're in year 15. Think about gold in the year 15. We are in the year 15 right now. So there's so much that can be done and that will be done through this process of adoption, that when we finally get to the point where we're at the top of the adoption curve, the opportunity that we all have now will be gone. And I said this on a Bitcoin Sessions, Why Are We Bullish podcast. And I said, the opportunity in Bitcoin right now will not exist later on. But that doesn't mean the benefits won't exist. After full scale adoption, you will still be able to properly store your value, but you will not be able to benefit from an emerging digital asset class, from a huge transfer of wealth from a dying system to a new emerging system. So we have an investment opportunity right now in Bitcoin, because as this asset class continues to emerge, tremendous amounts of wealth are going to be transferred into it. And that means that there's potential for capital gain. But after we have mainstream adoption, yes, you will still benefit. The last person to join the Bitcoin network will still benefit and still be able to have secure value and store value of their time and energy through space and time. No problem. Absolutely. Those benefits aren't going to disappear. But the investment opportunity, the opportunity to not only get you off of the hamster wheel, but your family and their kids get, like, I want my picture in the Citadel. I want me and my wife a picture in the Citadel. Oh man, there's Grandpa CJ, man. He bought Bitcoin when it was $200. That guy's crazy. Everybody thought he was great. But you know what? I love him because he changed my life. Right now is the opportunity to do that, because we're in the beginning of the adoption process. So that's an important thing to distinguish between, because that same opportunity isn't going to be around forever. And we don't know how long this process is going to take. I know you guys, you watch my content, you know I say this all the time, but I want to reiterate to your listeners, the only difference between inflation and hyperinflation is trust. Once trust is gone, the dollars will lay worthless in the street. People ask me all the time, what's the difference? What's the difference? All through time, whether it was Rome or Greece or Weimar or Venezuela, it doesn't matter, because it's different in every single economy. It's different with every single society and culture. But what's same across all of that time and all of those different settings is the loss of trust. And if you look in Venezuela versus Argentina, Argentina has printed a lot of money. They've probably printed enough money to create hyperinflation. So why hasn't it happened? Well, the answer to that is that the people still trust the government, right? You look at what the elections in Venezuela, Maduro won, but nobody believes him. There's no trust remaining, so their currency remains worthless in the street. You look in Argentina, Milei won. Well, everybody trusts the government, and they have not hyperinflated. So the only difference between inflation and hyperinflation is trust. And nobody, I don't care who you are, nobody knows that moment when that final straw is going to be pulled and fall off the camel's back. But I think we're, what we talked about earlier in the show, what's going on politically, what's going on between families, the drastic divisions that we're seeing, all of this creates a scenario where trust is very, very delicate. And if trust is lost, we will transition from inflation to hyperinflation. And to be honest with you, I hope that does not happen. I do not want that to happen. As an American citizen, I want to see Bitcoin as a peaceful revolution be integrated as the Trojan horse and slowly make us better over time as people continue to learn about it. And that saying comes true. You don't change Bitcoin, Bitcoin changes you. Well, we need time for that to happen. And I think that's going to be a more beneficial thing for society and for the world if we can see that happen,